couple of scenarios here. Either start off lower, this 97 level, if you look at 97, was significant, and that we get some type of bounce from 97, possibly back towards 99, 99 and a half. Otherwise, we could maybe retest as really the next big inflection point after what we saw right here is going to be next week at this time, or a few hours after that, the Fed. And the whole world believes they're going to tighten. So perhaps what happens here is that people that have money made short the dollar begin to decide to book profits in front of the Fed. It creates a rally, strengthening the dollar into the Fed. My bias would be if we rally into the Fed right after the Fed, that's another shorting opportunity in the Dixie. Basically, we're setting up about a 300-point range from the high we had last Thursday, all done in one day, filling out action within this massive range to the downside, which I talked about during this wedge formation. Eventually, I talked about all the bearishness in euro, that it was too crowded, that there was going to be a stop hunt, everything manifested. So we did quite well on a lot of different euros, euro crosses. Looks like the yen is already peaking, may not get to 24. But what do we do from here? I don't chase. I never chase. So even if the euro has some more left, I talked about potentially 110.50 being an important level. Above that's 112.50, but my overall goal is 115 to 120 before this dollar rally, this dollar break terminates. So what we want to do is we want to look for dollar strength to sell into to fade. So a couple of scenarios, we pull back in here and then begin some dollar short covering that could give us a rally into the Fed next week. 99, if we got to 99 and a half, that would set up a 107.50 buy in the euro. It may not be that deep. Maybe all we could look for is pullbacks to 108 now. But we wanted to take advantage of this type of magnitude move, which even though we had this kind of magnitude move down here, something else we were there for. It was not a reversal day. This is a textbook key reversal. You had a daily, a weekly, and a monthly reversal all at the same time. In fact, let's see, as we head towards the end of December, we closed at 97 at the end of November, so that would be a natural place. It was also a breakout. So I also wouldn't chase the short side of the dollar for another 60 points here, which could take us to 10 and a half, but then looking for rallies into next Wednesday to take advantage of at least, there should be at least one or an A, and then a B, and then a C to the downside, which 300 points from 97.60 gives you 460 right down here. So that's my next goal for the next wave down. That should take the euro to 112.50 or better, maybe more towards 115. And then you can't even rule out a dollar rout, which is going to end up taking out these lows. So we'll take it one step at a time. This was a giant step. It was a one of my better calls in magnitude and timing, although there have been quite a few since I've been with RoboForex. And now we want to look for opportunities to sell the dollar on strength. Before, right in here, it was a theory. It was a forecast. Now we have more evidence than we did before last week that this is a dollar peak. I'd be very surprised to see new highs just based upon a Fed rate hike. 99 and a half was a pretty significant area, 99.60. So over the next several days, even if we follow through a bit more to 97, I still think there'll be some type of retrace to take advantage of. Looking to short the dollar, looking for 94.60 for a target in the dollar index going into 2016. Give me a Y if you're with me. You understand my analysis, which is basically a follow through for The forecast of calling the dollar top before it happened, being there with good levels for entries prior to Draghi last Thursday. Everyone with me there on the dollar? So a lot of talk about crude. Crude oil broke to new lows. Now the whole world's talking about $20 crude. I've even heard the potential for $10 crude. So even if we're going to 20, I think we're now entering a zone where there could be some type of reflex rally. I'm looking for another push lower, maybe on this dollar recovery, but I think that we're getting very close to something here. Okay, maybe another $1.50 lower. Let's look at a daily nearest. We take the premium out of the equation. Okay, so we finally took lows out from 38. The spots here at 37. I'm figuring 36 to 35, which is also going to set up, and I'm going to give a macro view in Canada, because I do think there could be a pretty good rally from this 35 range, 36 range, maybe back at least some type of retrace from 51, 16 bucks. Why not back to 42 to 44? And I think that'll set up a nice correction in Canada. We're now even starting to get, like I said, we had no reason to short Canada for the last few weeks. Canada's been bucking the trend of a weak dollar as it continues. USD CAD continues to strengthen despite what the euro did. So looking for some type of inflection point in the crude to create some type of bear market rally. Could even be as big as this. This was a huge rally from 38, an $11 rally to take us back to 44, 45. If you're with me, which tells me we should be stalking and beginning to pay attention to price action in USD CAD. Take advantage of what might be a nice top. The Aussie short continued to work. I talked about, hello, Amit. Hope you were able to take advantage of my bearish dollar forecasts over the last several days. Were you able to? Congratulations. Hope that I aided you and that my analysis provided some conviction for you to pull the trigger. Okay, so in the crude, I'm looking for a flush out and a potential high coming up in the USD CAD. The gold market bottomed at 10.52 as forecasted. Could probably move out to next year. Good job, gold. Had a nice rally in the gold. It wasn't as dynamic as the dollar. In fact, the gold looks heavy to me again. So I'm not ready. The Aussie did work from the 3 drive formation. I actually think that there could be a decent buy in Aussie down around the 71 level, but I talked about the 3 drive to a top formation in Aussie last week that manifested for well over 180 pips on the short side of Aussie USD, and I'll probably be looking for buying opportunities in the Aussie around the 71 level. So perhaps gold helps that happen. Gold washes out one more time, but the Aussie hasn't made a new low for several months now. So favoring buying breaks in Aussie. Now they're, if you're short, I talked about a target under the 72 handle. That happened this morning. Should have been out booking it. If you want to trade one more decline in Aussie towards 71.20 or so, that's not exactly my cup of tea. I was calling the Aussie a scalp, a counter trend trade. I'm bearish a dollar. That should be supportive of the Aussie, and I think the 71 area, the big round number, will be something to pay attention to. So we have the oil with Canada. We have the gold with the Aussie. US dollar yen has surprised me. Not long term, but I thought I would have a chance with as strong as the equity markets have been, the way we recovered on Friday. Equities bounced back, got back everything it lost from the weak dollar, but now beginning to roll over. US dollar yen looks very vulnerable here. Don't think we're going to see 24 anymore, and do believe a pretty huge move in US dollar yen is underway. Could even take us longer term back down towards the 110 level. So this to me looks like we're rolling over. Of course, anything could happen. Maybe one more spike to 21.20. But the US dollar yen putting in a pretty negative day. I think it's based upon hawkish comments coming out of the BOJ. How about that for a change? You know, everyone's been waiting for them to ease again, and now they're talking like hawks, kind of like the Stevens from the RBA. So we, you know, not everything is diverging. So TLT is going to do okay. US dollar yen going down, treasury prices going up, yields going back down, which is pretty counterintuitive into the Fed. But to me, it looks like this may have been a bottom, getting pretty good action. I thought after this, I'd have a better opportunity short the yen at 24. That didn't manifest. Can't get them all. At least with my bias, I'm hoping no one got long US dollar yen looking for the super bull scenario, because I said we should turn it back from 24, and that's exactly what's manifesting. So we have the S&Ps and the bonds. Risk off looks like it's going to happen into the Fed. Maybe we'll get some type of dollar bounce into the Fed as well. Any questions on any of the outside markets? I correlate US dollar yen with the treasuries and S&Ps. Yes. Ugly. 121. Just like I said, there'll be stop hunts all the way down in US dollar yen, just like there were buy stop hunts all the way up in Euro USD. So we'll get to that instrument. In fact, let's move to our individual instruments now. Always start off with the euro. So we'll do that too. So this was a big trade. I told people to buy it between 540 and 470. Huge move. Monday I said there's really no reason to short the euro. We have a confirmed high here, which implied another high was coming that may or may not confirm. We're diverging, but it's not ideal to me. Euro yen went to my target right away. I was talking about 133, 134. Euro yen looks good to me. The guppy still looks vulnerable to me. If you're patient, I'll get to all of those instruments, and if I miss anything at the end of the webinar, I always ask if there's something that someone would like me to go over, or something I missed. Okay, so in the euro right here, I talked about there's potential resistance up here around 110.5. That was an old support level right here. We're approaching a 200, moving at 1030. I'm hoping that we don't just blow through it, and that there's another pullback, possibly back down towards this 108 level into the Fed. I'm thinking that people may want to square up their short dollar position into the Fed next week. So I'm looking to buy pullbacks right around this range again. Even if we start off higher, if you want to trade a counter trend, that's fine. There is some divergence. I'm just going to be patient. I'm not in a hurry to give all this back, to give all this back in Euro yen, to give all this back in Euro CAD, and Euro CAD was the biggest, was 900 pips. So I talked about the divergences in all of the Euro crosses. So depending upon how aggressive you were, the most aggressive was the Euro CAD, good for a lot of pips. Euro Aussie even worked. Euro yen, I was talking 33, 34 down here. Here we are. So my view on Euro yen would be to buy pullbacks. I have a lot of confluence back here at the 132 level, 132.15. I would favor that. Does that answer your question on that? Think that there's more upside in Euro yen, even though the yen looks vulnerable. 133 should hold. Worst case, back down here, 3170. I don't think it's going to be that deep to 3170. It could be, but I have a lot of stuff right here at the 132 range for a buy. If you want to trade a counter trend, that's fine. I don't have any divergence. I have a little between here. In fact, maybe we head up, make a new high before we get the pullback. So anyway, not sure what happened to the euro. Okay. I guess I lost the euro. Oh, here it is. Okay. So my bias is we're going a lot higher. I think we're going to test on the weekly chart. These highs up towards 117 is possible to me. 115 up here. I think that we're still going to clean out buy stops. So I don't want to fight this trend. What I'm looking for is if the people want to get rid of their short dollar positions because they're afraid of an interest rate hike next Wednesday, a week from now, that it would be a buying opportunity. So on Monday, we didn't have divergence. Now we do. It's not ideal. It's a little over 70. So I believe between here and 1050, we'll get some type of peak and then a pullback. Hopefully back towards 108. I really don't see it trading much under the 107.40 level. And if you just take it as a simple rectangle now, let's just call this 110 level, which was one of my targets down here. I didn't think it would get there in 3 hours. I thought it was going to take 3 weeks, but it got there in 3 hours. Just a rectangle of 110 and 105. You know, just look at this as a rectangle. Okay, 105 support, 110 resistance, takes you up to 115. Takes you up here. Just a measured move. The next time the bears are going to come in, it's going to be up here around the 112.05, which was the breakdown. So I think that on the next pullback, if we get it at 108, 107.5, but short-term target could be at least 112, which was a trend line that it broke down from on the daily. So there's another target. But longer term, I'm still looking for 115, 117, and I won't even rule out some type of move towards 120. There's actually a weekly gap here. The low here is 120, and we gap lower the next week, 1976. So why not 120? Let me erase the fibs. So I pointed out the fibs in the euro before the bottom and was talking about, you know, when I was talking about a rally back to 110, 112, it was nothing as far as a retracement. So let's see. Let's look at these retracement zones again. So we could still use the same low point here because we did not take out the low in March. And right here at the 112.5 level or so is the 23% retrace of the move from 140 to 105. So I think that would be the next target for us back to this line, 112 down the road, and the bears will come in. They're going to be calling it a bear market rally all the way up. Okay. But I think that they could even shake out the bears over these highs, these highs, these highs. And what was my major market tell that told me about a dollar turn? Can anyone tell me what was the euro pair that told me we're going to have a turn in the dollar, a turn in euro, when the whole world said parity was a layup by the end of the year? Anyone recall what told me there was going to be a turn in the dollar? Something that was not making new lows with the euro. Euro is making 6. There you go. So Very good. I'm testing you. I'm glad to see you're learning. The euro pound, I think short term is reaching objectives too. So, you know, I was talking about the euro pound possibly putting in a right shoulder on the weekly. That was down here. I was telling people to accumulate in the low 70s. So you have about 220 pips. So like I was saying, the high beta trade was the euro CAD. The low beta trade was euro pound. But it was the euro not making the lows. I think this is a right shoulder developing here. There's nothing wrong with taking profits. I hope after 240 pips, if you got in when I talked to you about it, that you're taking some chips off the table. Because what do I see here now? Just like the euro. What do we have? What drive is this? Confirmed high, right? All right, and what's this? Drive 2, diverging. Drive 3 maybe up around 73 or so. I'd be taking profits. I don't want to short it. Although I do think there could be a pretty good pullback towards 72.40. But here's a potential third drive target right here, just off the 4-hour. So in the next several days, 73 is possible. But my view is to look to buy some type of retrace here. Eyeballing it, I like this 71.40 area or so. Maybe even 71 back to the breakout, but I'm thinking 71.40 after we peak here. So similar scenario that maybe the dollar has a little more weakness left, and then a lot of the dollar shorts, euros cross bulls, start booking profits, take it back down. I'd like to see a pullback into the Fed or after the Fed into this range for longer term buys, because I still have a bias in this trade that eventually, see, we're stalling up here at a 50-day moving. Here's a parabolic at 73.30, but eventually I'm looking for a breakout over 74, right? And the measured move off this formation is up here. I talked about it being a campaign trade. So until we start closing back under 71, I have to go with what was a theory down here that I had no confirmation that I was going to be right, except that how well it was holding compared to the euro, which was just something I noticed from watching correlations and comparing price action among related pairs. So now I have confirmation, I have stop loss points. So am I just going to say, oh, that's it, and give up on the trade? And even if you miss this first wave, pullback in 2, you're going to be set up for the money wave back to the upside and eventual breakout over 74. This should continue into 2016. Let's hope Janet Yellen does us a favor and people take it initially as hawkish. Whatever she does, they drive the dollar up and we take advantage of that. Give me a Y if you're with me. So euro pound was a great call too. You had many opportunities here, tight stops under 69.40, big trade. Low beta, low risk, 5-1, R. So the pound's a little trickier for me, and I said, you know, because I thought the euro pound was bottoming, since I think the euro pound has more left, that I'm not favoring longs in the pound, but I also use the caveat I don't want to short the pound if I'm looking for the dollar to turn south, right? So if I think the dollar is going to rebound into the Fed, I would say that, you know, the preferred short might be in the pound, which could be an ABC. But basically, until the dollar index gets down towards that 94 target I have, I'm going to, my preferred long is going to be still in the euro. Until I believe that the euro pound is going to end this move to the upside, I favor buying breaks in the pound, in the euro rather than the pound. Give me a Y if you're with me. But on days I think the dollar could rally, I'm not going to short the euro. My preferred short would be the pound. Okay? So the pound has a little weaker pattern than the euro, right? Much stronger pattern. We're making new highs in the euro. We're way under where the pound was up here on the 19th of November. And here we were the 19th of November here. So the pound hasn't even recaptured these levels that the euro completely blew through. Okay, so, you know, if I want to scalp alongside the dollar, my preferred short is what? I'm not endorsing it based upon what my view is in the dollar that continues to be bearish, wanting to short retraces, sell strength in the dollar, but the preferred short would be this chart rather than this chart. Everyone with me? Okay, so here's one I missed. I'm human. I thought we were going to have a move up toward this range. I was looking for a third drive to a top here, right up here, and we didn't quite get to my line. The high was 23.80, 23.60. But look at this. You know, so here we are at support. This is a pretty ugly day. It's a pretty ugly week. There's support levels all the way down. You know, there's some support here at 21. Then there's some support here all the way down at 118. And I actually think we're going to take out the flash crash low. This was a flash crash in late August. So we had something like this. So why can't we have something like this to take out the flash crash low? Which is going to be a 116, which then could be a pretty major breakdown if we take out 116. The measured move is about 9, could take it down to 110's been a long-standing target. Anyway, you have to look to sell rallies in the end now. I think all rallies will run into trouble here around the 22.25 level. There's no divergence anywhere. Risk off. So if you missed it, you have to wait for some type of reset and some type of rally back. Best guess here is maybe back to the support level. After lower levels, 22.5 or so should be pretty solid resistance. Give me a Y if you're with me. I do want to cover, because of my view in crude, I do want to cover the Canadian because I do believe a high is setting up here. I want to start with the weekly chart here. Look at this RSI reading. Look at this. Drive 1, drive 2, diverge, but over 70. Drive 3 at 70. So we have pretty major glaring divergence in Canada. So after crude, we got a capitulation break in crude. I'm looking for a peak in Canada. The daily is diverging a little bit too. It's not a great, it's a pretty strong reading, but we're starting to get some divergences on some of the shorter term stuff. I'm eyeballing 137, 138. So I'm talking about maybe another couple hundred pips up there. I would key it off the crude, and we haven't even had one divergence yet. So I'm just preparing you. Probably is going to take into next week, but I wanted to show you the glaring divergence on the weekly here. And this is part of the crude falling apart, which is pressuring the Canadian petrol currency. But we caught this reaction. I participated a little bit on the long side. I was smart enough not to be short, advised people not to be short Canada because I was looking for another flush in crude. So you may not have bought it, but at least you're not in pain like a lot of people trying to top pick it. And there really was no divergence most of the way up. You know, we had confirmed highs here, moved sideways, confirmed highs here. So this next high in Canada is going to be the first divergence. See that? And you know that we need a couple. So it's going to be a process, but I just wanted to give you a macro view that we could end up having a fairly big correction. We haven't had a big correction in a while. That perhaps the magnitude could be something similar to this. And this was 128. So it was about 900 pips. So if we trade 138, that could take us back down towards a 128, 129 level. Just wanted to give you a macro call. Do not pull the trigger yet. Be patient. Let these divergences build. Best guess is that we're showing some divergences when I talk to you next week, right before the Fed. On the yen crosses, I just want to point out that I've been negative the pound while I was bullish euro yen. To me, it looks like it's still vulnerable. I talked about selling rallies up here, really all the way back here. I think we're going to have a breakdown in euro pound under this 184 level, and we're headed towards 180. So sell rallies with stops over today's highs. I think today was it. We got up to about 50. 85.36 is the high. Looks pretty vulnerable to me. So two different pictures. Euro yen, strong picture. Buy pullbacks. Guppy, weak picture, sell rallies. Now we'll open it up to, is there anything I haven't covered you'd want me to take a look at for you? Or are you already overloaded with ideas? Leave it alone. SNB is going to come out, red event, trade the euro. Too much central bank risk for me. They played games before the dollar high too, didn't they? So that's my opinion. I'll look at it for you, but I avoid it. I don't trade it anymore. You know, I stopped trading when they pulled the peg. So just like the euro, it's kind of the inverse, although it gets exaggerated sometimes with SMB activity. But to me, the trend looks down. Sell rallies. Looks like we're getting what drive here on the 4 hour. What do we have here? It's not ideal, but we have potential 2 drive formation here. It's really almost a mirror image of the euro and the Dixie. So here's drive 1, here's drive 2. Sell ranges would be up around 101.10. Par and a half to 101 might be a short if that's your cup of tea. It's not mine. All right, so good luck. It's my mission that I'm teaching you methodology besides providing analysis, adding value to your trading experience at RoboForex.com. I believe I'm accomplishing that mission. I want to thank everyone for their attention. Good hunting, and I'll see you next week for the Fed. You're very welcome. Thank you, everybody. See you on Monday.